Okay. Do you know how silly this feels? Okay. I'll try not to blast you out. I don't know how this is going to work, but we will try. Okay. Are y'all seasoned finance people or new to finance? New to finance. New. You're a good man. You're a good man. Are you new to finance or are you a seasoned church finance person? A little of both, okay. Did it in the past and now you're doing it? Okay. Oh, okay. Well, welcome to finance class. Can we go to the next slide? Okay, this is what we're, let me, there you go, there's a handout. So here's what we're going to try to go over a little bit today. What does the Finance Committee do? And we're going to talk about the local church audit, statistics and how apportionments are calculated, the ministerial support form, and the Compass retirement plan. And then next slide, if we have time. Yeah, do you mind doing that? Thank you. So if we have time, we will talk about gift acceptance policy and how to release restricted gifts. Thank you. Yeah, this is great. Okay, next slide. This is what the Finance Committee does. So you're responsible for compiling the budget. Doesn't necessarily mean that you're deciding where the numbers go. You're compiling from information that other areas provide to you. You're overseeing stewardship. It's your responsibility to raise the funds that are needed to meet the budget needs. You're administering and dispersing the funds received by the church, and you're doing it in a way that is compliant with the donor's wishes. You're responsible for counting and depositing the offering. You're going to, if you don't already have written financial policies and internal controls, you will want to do that. Using contributions according to the donor's intent. Providing for the annual audit. Reporting to the church council and the charge conference. So that's a quick summary of the responsibilities of the Finance Committee. It seems a bit overwhelming, but it is doable. So any questions, next slide. Any questions about Finance Committee duties before we move on to the local church audit? Okay, next slide. So the local church audit is something that you're going to do annually, and it is an independent evaluation of your financial reports, your internal controls, and it's there to make sure things are being done properly. It's not necessarily intended to be something to find embezzlement or fraud, but it can happen that as you're doing this audit, something may come to light about misuse of church funds. So it's good to have someone that has maybe some audit experience or knowledge of bookkeeping and that sort of thing, but it's not necessary. In one of the first handouts that you have, there is a local church audit guide, and this is put together by the United Methodist Church, by the General Council on Finance and Administration. They provide this guide, and there are appendices at the back of the guide that basically give you a step-by-step on how to do a church audit and how to look at internal controls and that sort of thing. Now, if you're with a small church, because one of the requirements is that this person is independent of finances. And if you don't have someone who is independent of finances who could do this work, then you might want to swap with another church. Go down to another United Methodist Church down the road and say, hey, could we swap audit services? And that way you're getting the independence provided by someone from another church. Now, if you're with a large church, next slide, please. Now, if you're with a large church, you might want to consider having a certified public accountant to do your audit. And that local church audit guide has some information about when it thinks you might want to consider having a certified public accountant come in and do your audit. And it's based on your revenue. And I have highlighted guidelines because these are not rules that you have to follow. These are more like suggestions. And hiring a CPA to do your audit can be very expensive. So think about, is it worthwhile? Think about maybe some alternatives. Now, if you want to use a CPA, just know that within the reports that CPAs offer, the highest level would be like an audit of your financial statements. They may say, well, we could do a review or we could do a compilation. Well, those do not qualify because they don't look at the internal controls. So you don't try to substitute that. If you do decide that you want to get an audit, it's typically something you're going to commit to each year because it doesn't make a lot of sense to get an audit for 1 year, skip a couple of years, and then the auditor comes back and says, well, in order to audit this year, I have to audit the beginning balances, and so it just creates more work. So kind of once you make the decision that you want to do the CPA audit, then you're probably going to stick with it. Who's going to be included in the audit? Next slide, please. We're going to include anybody who's using the church's federal ID number. We're going to exclude the United Women in Faith because that's just there's a specific exclusion that's a different set of rules. Now, they should get an audit done. They just won't be part of the church audit. But this is going to include things like trustee money, memorial funds. If you have any investment or endowment kind of funds, that's included. If you have Sunday school funds, that's going to be included. Pastor's discretionary fund might be called something else in your church, but essentially what the pastor uses to do good. Next slide, please. Also in your handout, there is a form called the local church audit. It's called the report of the annual audit. And this is not the audit. When you're doing the audit, there's actually a report that the auditor will create or write to tell you these are the things that we found, or that we found everything to be great, everything's good. This is what you're going to turn in, this form, this report of the annual audit is what you're going to turn into your district. So you're going to fill out the different funds, the beginning balance, additions to the funds, subtractions from the funds, ending balance, that sort of thing. And your auditor is going to sign it, but this is not the audit. This is due, it's done on a calendar year, so for 2025, this will be due March 31st of 2026, and you turn it into the district office. Any questions about the local church audit? Okay, then we're going to move on to statistics. So can we go 2 more slides? There we go. If you've been doing this a while, you might recognize Ezra. That's the old website that we used for collecting the statistical tables. Some people refer to them as tables 1, 2, and 3. The current website is called AC Stats. I generally refer to them as statistics, but they all are the same thing. The website and the forms, these are maintained by the denomination. This is a function of the General Council on Finance and Administration. And so they tell the conferences, here it is, you administer it to your local churches. Next slide, please. So the statistical reports are put into the website, the stats.gcfa.org website, and they're due by February 28th. Hopefully before the end of November, I will be sending the users, last year's users, and your pastor an email that tells them how to log in. I reset what happens is every year GCFA goes out and clears out all the users. So if you were a user last year, your old username has been removed. I will create a new default password. And when you get the email from me saying it's ready, and here's how you log in, then your GCFA number is your username, and then whatever password I set is going to be your password. And once you log in, you can set up individual users. So if you want to go put in Beth Westbury, treasurer, Beth Westbury fills out the information with her email, her name, telephone number, all that good stuff, and creates a username and password for Beth Westbury. If you forget your password or have a problem, the GCFA number and the default password always work to get you in. As you're putting the information into the website, you want to pay attention to any errors or warnings that you get. These will be very helpful to you in case you make a keying error. So for example, you don't put cents in, you just put whole dollars in. So if you key in cents, it's going to probably have some sort of warning that says, this went up, say, 50%. Are you sure this is right? And if it is, give us an explanation. And so that gives you a chance to double check to make sure, did you type something wrong? Did you put something on the wrong line? That sort of thing. And this is, you're going to see that this is going to become important because what you fill out in statistics has an effect on what your apportionments are. Next slide, please. For there are lines in there where you collect the apportionment information and the cost of direct bill. I will put those in. I will take data that we have received at the conference treasurer's office, and I will put in what your apportionment askings are, how much you've paid. I'll put in how much you've paid for direct bill, if that's applicable. So I'll put in the health piece, I'll put in the pension piece. Those lines will be hidden from you so you don't put that information in. Next slide, please. Now I want to focus on some lines where I typically see errors and where it affects your apportionments. One is the line 41, and that's base compensation. This is the base compensation that you pay to your pastor. If you have more than one pastor, then there are separate lines. There's a line for the senior pastor, there are lines for associate pastors, and any deacons that you might have. Welcome to finance class. There you go. The number that you put into this line should be the gross compensation that comes from the ministerial support form, at a minimum. That's what we're expecting to see there. If you have a change in pastors, then you might have to do some math and say, well, let's take the ministerial support form from the first half of the year, take half of that number in gross compensation, add the new pastor's ministerial support form, gross compensation, take half of that. That's typically what we're going to be looking for in the gross compensation. If you have a pastor, if you do not have a parsonage and your pastor receives a housing allowance, there's a place to put that as well. The key difference is if your pastor has a utility exclusion on the ministerial support form, that doesn't go anywhere on the statistical tables. And there is a handout, your third handout in there, I believe, is a ministerial support form. And it has blue lettering and it has red lettering. And I believe it is the blue lettering that has to do with statistics, and the red lettering has to do with the W-2 and where things go on the W-2. Yes, red letters are W-2 references, and blue letters are statistical tables references. Now, the amount you put in as gross compensation might be higher than what's on the ministerial support form, and that's because things like bonuses, cash gifts, that sort of thing, that would go into the gross compensation as well. Line 42 is where you're going to put the housing allowance that we just spoke of. Next slide, please. Line 47 is where you put operating expenses. And these are things like the utilities, maintenance, insurance, office supplies, that sort of thing. You don't put capital expenditures there, and you don't put debt payments there. Line 48 is not part of the apportionment formula. And you're going to report on line 48 debt payments. That's both principal and interest. Line 49 is not counted in apportionments. And you're going to put their capital expenditures. And capital expenditures are your big out-of-pocket purchases. These are going to be things like replacing HVAC units, replacing a roof. I suggest that when churches are establishing their financial policies or doing an occasional review of their financial policies, they have something that says, if it costs more than X dollars, we're going to count it as a capital expenditure. So for example, at the conference, my threshold is $5,000. So if something costs more than $5,000, which would be typically of a heating and air conditioning unit, it's treated as a capital item. If it costs less than $5,000, it's treated as sort of an office expense. I did have a church call and say, could they set the threshold at $1,000? And I told them I thought that was too low because I had just paid $1,000 to have a toilet fixed. Plumbers are extremely expensive. So the most common error I see that is doing harm to a church is that they put capital expenditures in line 47. And when you put the capital expenditures in line 47, the formula is going to cause you to get more apportionments than you might otherwise receive. The error that I see that is helpful to the church is they misstate the gross compensation of the pastor. So I go looking for those because I have access to your ministerial support forms, so I tried to make sure there's some accuracy there with the idea that if all the churches are playing by the same rules, then we're going to get a fair apportionment distribution among the churches. Next slide, please. When you're done, there's a submit button. So you actually have to submit the form, and there's a little page will pop up and it'll say who's submitting this and here's some additional information. So be on the lookout for that. You're not really done until you submit it. And if you go to the conference website, you can find more information about statistics. Not now, I haven't done it yet. What's out there is last year's stuff now. Okay, you want to look at handout number 4 because we're going to talk about how apportionments are calculated. This handout identifies the amounts that are on the ministerial support form that we use in calculating apportionments. That's lines 41A, that starts with the base compensation, through line 47 for operating expenses. And we add those lines up and we come up with a total that is your net funds. And we do that for 2 years and we take an average. So we're going to take, when we were doing the 2026 apportionments, we had your 2024 statistics. And we had your 2023 statistics. We added this up. We averaged the two, and that became your average net funds. Then we take the average net funds for all of the churches, add them up, and come up with a grand total. Then we'll take your church's average net funds and divide it by the total for all the churches, and that becomes your factor, your percentage of apportionments. We take your percentage and we multiply it by the budget that was passed at annual conference, and that becomes your apportionments. So on the back side of that is a oversimplified example where we have 3 churches and we take their net funds and we come up with a 2-year average, and then we take that 2-year average for each church and we add them up. And in this example, it's $100,000 is the total. So Church A, having a 2-year average of $50,000, will get 50% of the apportionments. And Church B, having a 30,000 average will get 30%, and Church C having a 20,000 average will get 20%. And then we multiply that by the conference budget of $15,000, and everybody gets an apportionment value assigned to them. So what you can see is apportionments are in part your church's relationship to all the other churches and their expenditures. If a church reduces their spending, there is this expectation that their apportionments will go down. And it is possible your apportionments might go down if you're reducing expenses. But it's in relation to what other churches are doing. So if other churches are also reducing expenses, you may not see a reduction in your apportionments because it's in relation to what everyone else is doing. Next slide. So, questions about statistics or how apportionments are calculated?
So the apportionments, is there some big number that you're trying to hit for the budget at district level or somewhere higher to reflect from all the churches?
Good question. So the question is there some target number that we're trying to hit with apportionments? Lately, in the last few years, because of churches separating and fewer churches being able to contributing toward the apportionments, the idea has been to reduce the budget that we ask churches to pay by at least the amount that the other churches were paying. So the ones that left. So we didn't want to penalize the churches that stayed. We didn't want to penalize you. And so we've tried to calculate, if, and I'm making these numbers up, I don't remember these. If the churches that left represented $2 million worth of apportionments, we tried to reduce the budget by $2 million. And Bishop Fairley has had us go through a process to look at our structure. And so, for example, instead of having 12 districts, in the future we will have 10 districts. That will bring down district level apportionments a little bit, or at least redistribute it a bit. So there correct. Oh, okay. I can't name them all off the top of my head, but there are a lot of different buckets. One of the big buckets is conference benevolences, and that goes to fund connectional ministries, Board of Ordained Ministry, the bishop's office, the advocate, and I know I'm missing some. Then we have campus ministries. We have district administration, which helps to fund the district offices. So districts actually get funding from two different places within the greater apportionment budget and a specific district budget. So there's two different fundings that go toward the districts. And then we have a district superintendent salary line. We have administration, conference administration, so that's my office, clergy services, the United Methodist Center, which is where the conference offices are. We also have things that I call pass-throughs. Well, before we do that, we have congregational development, which helps get churches started or helps churches make improvements. And we have equitable compensation that helps pay particularly new church pastors, but also provides grants to churches who have trouble paying their pastor. But we also have things that are called pass-throughs. And these are things that we collect and then we send right on to the beneficiary. So camps and retreats, if you're familiar with Asbury Hills, they're a line item in the budget. So whatever I collect in their funds, every month I send it over to them. We collect what we call the Senior Scholarship Fund. And that is to fund, that we send that money to Columbia College, Claflin University, and Wofford University. We have a separate line that is for Spartanburg Methodist. And we have support for the Methodist homes, the retirement homes that are Methodist affiliated. And then we have the apportionments that the general church assigns to us. And those are things like the World Service, Episcopal Fund, Africa University, interdenominational, I forget the whole term, but so there are lots of buckets that we're collecting. Does that help? Okay. Any other questions about apportionments or about the statistics that we use to calculate? Correct. So there's a lag. You know, for 2026, let's talk about the timing. That's a great question. Let's talk about the timing of what happens. So when you pass the budget, when the churches pass the budget, this past annual conference of 2025, then I start doing the various calculations. Well, in July of 2025, you have not reported your 2025 expenses. You have not done your statistics for 2025. So that means I'm using 2024, and I'm using 2023. So there's at least a 2-year lag between the changes that you're making. You might be making changes for your 2026 budget, and it may not show up until 2028 apportionments. Mm-hmm. Yep. Any other questions about apportionments, statistics? Okay. Next slide. A couple of things that I want to point out about the ministerial support form is that there are basically two things. When you go to charge conference, there are basically two things that the church is voting on. You're voting on, if you don't have a parsonage, you're voting on the housing allowance for the parsonage, or in lieu of parsonage, housing allowance in lieu of parsonage, and you're voting on the gross compensation. The other things, like just the top half of the ministerial support form, just below the gross compensation, these are the benefits that are paid out of the pastor's compensation. So when a pastor signs up for health insurance, then there is a portion that they pay out of their gross compensation that you're going to withhold from their pay, and then you're going to send it to the conference in payment of the direct bill. Next slide, please. So you've got the section where You have the benefits that are withheld from the pastor's pay. One of the things is going to be the retirement that you're going to withhold in addition to health insurance, dental insurance, or whatever else in health benefits the pastor may have elected. And then the utility parsonage exclusion, and I want to make sure that we understand how that works, is tax law allows a clergy person, not a lay supply, but a clergy person, to say, I want a certain dollar amount of my compensation, of my gross compensation, to be put into a special tax bucket where it is not going to be subject to federal income taxes. So what this designates is this says, okay, in order to get down to the taxable compensation shown on the ministerial support form, you have to take out the utility parsonage exclusion because it would be non-taxable. So you subtract it from the gross compensation to get to the taxable compensation. But you're still going to pay it to the pastor. So then it gets added back to show the amount you're actually going to pay to the pastor. Now, this doesn't work if your pastor has asked you to withhold income tax. Tax code says clergy are not required to have income tax withheld, but they can ask you to do that. So a pastor may ask you to withhold income taxes and pay them over to the IRS on their behalf. Some pastors don't do that. Some do it with quarterly tax payments on their own, but they can ask for that. Next slide. So here's where we talk about direct bill. If you have a pastor who is 3/4 time or higher, they are eligible to participate in the health benefits. And if they are eligible for health benefits, then you're going to be charged, your church is going to be charged the health fee, the charge health insurance cost. You're also going to have, and this is, the handout has the 2025 form. We're going to talk about the new retirement plan that's coming, but this one has the old one, so you see a defined contribution from the church. All this under direct bill, so it's like the lower half of the form. All of this is paid by the church. It's not withheld from the pastor. It is paid by the church. So you've got your charge health insurance cost, you've got your defined contribution for retirement purposes, you have your defined benefit contribution for retirement purposes, and you have your welfare plan, which is disability and life insurance for your pastor. And so all of these things would be billed to the church and paid out of the church's budget. Next slide. Yes. There's not an answer for that. So what happens is, I tell churches it's really between the pastor and the IRS, because this is something that they report on their personal income tax return, on their 1040. You're reporting certain information on the W-2 about how much they've claimed as a housing exclusion. But what they report to the IRS is done on their 1040. And they have to keep track of the documentation that, so if they say, I have a utility parsonage exclusion of $10,000, then it's the pastor's responsibility to justify that they spent $10,000 according to what tax code says they can do. Well, okay, I'm not going to necessarily give you tax advice, but it sounds like if you make $10,000 and you have expenses that would otherwise qualify of $20,000, I think you could put the whole $10,000 in the utility parsonage exclusion. That's between you and the IRS. Yeah. Okay. Anything else? Mm-hmm. It's a pretty big category. So I've had people tell me that cleaning supplies, toilet paper, basically, anything but food could be put in there. There is a document, if you go to the GCFA website, there is a document that talks about the housing exclusion, and it has a form at the back of it that gives some examples of what, when a pastor is trying to decide what their housing exclusion should be, it's just like a checklist. So, for example, if you don't have a parsonage and they have a house, it might be their mortgage payment or it might be their rent payment that is counted in that utility exclusion. So. Other questions? Okay, next slide. So you have another ministerial support form in your handouts, and this is a 2026. And you're going to see that it's different because the gross compensation is $109,835. So only full-time pastors are eligible for Compass. If you do not have a full-time pastor but want to participate in a retirement plan, we do have options. So, but it means the church has to adopt the plan, and but that's more than we can go into today. When the pastor is deciding what they want to contribute, they have 3 different buckets that they can choose from. Most people choose before tax because they want to take that money. They don't want to pay the money on the tax now, so the IRS allows them to take that money, put it in their retirement account, and it won't be taxed until they pull it out. Just like if you participate in your employer's 401k plan, you're getting the same kind of treatment. They can also do Roth. If they choose to do Roth, it's being done with post-tax dollars. And they can also just do plain old after-tax. That is also with post-tax dollars, so they're paying the tax on the after-tax and on the Roth. You're going to have higher taxable income now to not pay taxes later. And with the before tax, you're going to have a lower taxable income now, but you're going to pay taxes later. So they've got 3 different options. If you're doing the payroll for your church in 2026, you're going to want to pay a little closer attention to the ministerial support form and what they have elected. The plan compensation definition is changing when Compass changes. So Compass is coming into play January 1st, 2026. Under the old method, the old plan, billable compensation, which is a plan compensation definition, and it's used in calculating the benefits. If they had a parsonage, it was 125% of salary, the gross compensation. That became the billable compensation. If they had a housing allowance, it was the housing allowance plus the gross compensation. That equals billable compensation. Beginning in 2026, the housing allowance stays the same. Housing allowance plus gross compensation, however, there's a minimum of, I think, $10,000. It has to be at least $10,000 in housing allowance. So you add those together, you get billable compensation. But if it's a parsonage, now billable compensation is 135% of gross compensation. So when the church is being asked to pay 7%, it's going to be 7%. Your contribution is 7% of the billable compensation, and the calculation for billable compensation has changed. It's going to be higher. Also, in order for your pastor to get the most match out of the retirement plan, they have to put in at least 4% of billable compensation. So if they're not putting in 4%, they're not maximizing their benefits. Yes? Okay. So if you have more than one church on the charge, then it's looking at the total. It really doesn't matter where the 4% comes from. It's going to take the charge numbers, and if it says for the charge, your 4% needs to be $2,000. And then it doesn't matter from the pastor's perspective. That $2,000 can be deducted from his paycheck from one church. He doesn't have to, or she doesn't have to split it up between the churches. And the calculation of the cost to the charge is going to be handled the same way, in that you're going to say church number 1 is going to say pay this % of the charge benefit costs, and church number 2 is going to pay this % of the charge benefit costs. Does that make sense? Okay. Other questions? Next slide, please. Now, here's something that is really, if you're, do you have a full-time pastor? Raise your hand if you have a full-time pastor. Okay. Raise your hand if you are already paying your direct bill using the ACH, where the conference drafts your bank account. Okay. Here's a big benefit starting in 2026. Currently, if you will let the conference draft your bank account for the direct bill, we give you $15. We give you a credit, a discount of $15 per month. In January, if you will let the conference draft your bank account, the discount goes to $150 per month. Okay. Awesome, awesome. I encourage you to sign up for that. If you are getting a direct bill for your pastor, I highly encourage you to sign up for the ACH and let us draft it. If you are paying by Vanco, that is not the same thing. If you make your direct bill payments through Vanco, you do not get the $150 discount. You don't get the $15 discount that we're using now. So if you're doing Vanco, please switch and take advantage of the $150 discount. Next slide. Any questions about Compass, how that affects your church? Okay, then we will talk about gift acceptance policy. You have a sample policy in your handout. It's called Gift Acceptance Policy. This is from Discipleship Ministries of the United Methodist Church. It talks a lot about endowments and planned giving and that sort of thing, but I use it as an example to say you should have some sort of gift acceptance policy. It might be where you define, if you haven't defined it in your financial policies, then you might want to define how are we going to treat things that are given in memory of someone? How are we going to treat a contribution that might be for a project we won't do? One of the things that churches will tend to do is someone will say, well, I want to do a rose garden. And so they give $100 to put a rose garden on the grounds of the church. And the trustees are like, we don't want a rose garden. Well, why did you take $100 for that? So you might set up, what is the process of accepting gifts for things you don't plan to do? Or what will you do, let's say you're trying to raise money to buy a new piano for the sanctuary. And you go, okay, I have no idea what a piano costs. So let's say it's $30,000. So we're trying to raise $30,000 to buy a new piano, and now you don't get enough money to buy the piano. What you gonna do with the money that you did get? So when you're doing like a campaign of that sort, I suggest you have some sort of plan. Well, it's something that you have to be able to address, because you might want to say, well, if we can't get enough money to buy the piano, we're going to give the donor their money back. Or or better yet, you didn't get enough money to buy the piano. So everyone who gave toward the piano, you send them a letter and you say, hey, we didn't get enough money. We can't do this. Would you consider putting your money toward, I was thinking something musical or worship, but, that might be the option. You might give them 2 or 3 choices and say, would you prefer that it go toward music camp for kids, go toward a new sound system for the sanctuary? Give them some options if you can't do that. But what if you raise more than $30,000? One of the things you want to do is keep in mind, I have sort of this policy. The first gift you receive is the first one that's spent. First in, first out. So then if you end up with more money than you need, you just go to the most recent donors. You've bought the piano. Now you got $2,000 left. Go to the people who most recently gave you up to $2,000, and then you can go back to them and say, do you want to put this toward, music, new choir robes? How do you give them some options based on your church's needs, and let them decide how they want to use their money, because their money has been restricted. I think you should have something defined. But some of them are so big, it's not specific. Building fund or trustees fund. I'm giving to the trustees fund. I'm not saying you have to paint the nursery with it. And that's something that I think you need to think about, is when I say, well, I want you, here's $100, I want you to paint the nursery. And you might say, well, I don't have a nursery painting fund, but can I just put it like in the building fund? And just be honest with them. We may or may not paint the nursery this year. Before you take that $100, before, you just say, hey, we may or may not paint the nursery. So can I just put this in the building fund because we need a new roof and we're ready? Say that. A letter would be, a letter that would be nice, or just change the 4-line on the check. However, I suggest that if you're doing a campaign for the piano, you might have things that you put in the bulletin that says, hey, we're trying to raise money for the piano. We need $30,000. If we get more than we need, this is what we plan to do with it. We're going to do it. We're going to do a children's music ministry. We're going to buy new choir robes. We're going to put it toward an audio-visual system, or we're going to put it toward the roof, if that's... Think about what you want to do to create a new designated fund. So you don't want the person to come up and say, I want a rose garden, and you start a new rose garden fund. So think about the funds that you want to have in your financials, and when do you want to start a new one? Your financial policies need to define that. So if you have something that's called the Memorial Fund, and then your financial policies should define who controls the Memorial Fund. Is that controlled by church council? Is that controlled by trustees? Is that controlled by some other body of the church? And then they should have some guidelines. Well, we're going to use memorials. It could be very generic. You could say, we're going to use memorials toward our general budget, period. It could say, we're going to use memorials we're going to put memorials in the building fund. And then the building fund needs to have, I use building fund very generically. It doesn't mean you're going to build a new building. I mean, you could say the building fund is here to do maintenance on the building. So if you're giving money to the building fund, you're doing things to help us maintain our church, the structure. Maybe we need new carpet, something like that. So have definitions of who's going to control it and what might it be spent on. And keep it broad. The building fund can be spent on the building. And you might say, well, that includes, if we need to, we'll pay utility bills out of it. If we need to, we'll pay for routine maintenance out of it. $1,000 toilet bill. Yes. Yeah, it does, because, and that might mean a phone call. You might be able to handle it quickly with a phone call. And, right, you might just want to hold on to it. If you think you can resolve it quickly, you have a phone call. Yeah, next Sunday I'll come in and I'll change the 4 line and I'll initial it, and then you can deposit it. If it's not something you can do quickly, you don't want to have a check sitting around. You might have a special, I'm going to call it a fund, you might have a special fund where you have these, I don't know what to do with it. And so you put it in there until you can get it resolved. I gave to the Rose Garden. We're not going to do a Rose Garden. So it's sitting there and I don't know what to do with it fund. Yeah. Good for you. Good for you. Did they let you spend the money on something else? Okay. Most of the time I find that the church people are agreeable. I'm not doing a Rose Garden. I need the parking spaces. I can't do a Rose Garden. Okay. Put it toward the children's playground. There's probably something that you do need the money for. I haven't seen a church yet that was like, no, I don't need any money. I wouldn't know what to do with it. Nobody tells me that. Nobody calls the conference treasurer and says, I have too much money. Can I send some to you? Yeah. Next slide, please. So we've talked a little bit about this, the gift acceptance policy, and we've talked a little bit about restricting gifts and how to unrestrict them or release them. Next slide, please. And so it's about the donor. The key takeaway is the donor has said, I want you to use it on the Rose Garden. Only the donor can decide to use it on something else. And you have to be prepared. If I'm one of those ornery church members, and I know it's none of you, but if you've got one of those ornery church members who says, if you're not going to put it on the Rose Garden, by golly, I want my money back, you have to be prepared to give it back. Hopefully you don't have those, but I hear there are churches that do. And the things that you can do to protect yourself are the things like the promotional material. So if you're starting a new fund and this fund is to buy the piano, put in your promotional material. If we exceed X dollars, we'll take that money and continue to use it for music purposes. Something like that. Next slide. I think we've been over that. Next slide. Okay, the end. What I want you to know is the best part of my job is helping local churches. So if you have a question, you have my contact information. that phone number rings on my desk. That you don't go through the conference lobby receptionist to get to me. You don't go through an operator. That rings on my desk. You have my email. If there's anything I can do to answer questions, even if, there are plenty of times when I go, yeah, you're going to have to talk to your DS. But if I can answer your question, I will try to help you. If I can't answer it, I will try to get you to the right spot. Okay? Now, any questions that you'd like to ask of me while we're all here gathered together? Okay. Yes? So you would want to write the policy, and you've got a sample here that you can kind of start with. But you'd want to write the policy, have it approved by the administrative council, start implementing it, and then you just go forward with it. You don't have to apply it retroactively. What you might run into, because it's going to be hard to apply it retroactively if you've already accepted restricted gifts, you can't go back now and say, oh, we said we'd use it on the piano, but let's change our mind now. If you have restricted gifts now and no plan for how they can be used, if you can't actually do what the donor wanted you to do, then you have to go back to the donor and say, we can't buy the piano. We can't do the rose garden. Would you let us use the money for something else? And that's why I like a letter. I mean, it might be preceded with a phone call if you have a good relationship with that person, and say, hey, we're going to send you a letter. We're going to give you some options. Just tell us how you might like this $100 to be used, and then bring it back, and then we'll do what you want us to do. But we can't do the rose garden. We can't do this, that, or the other. Okay? So if you create a policy that says, when we get memorials, this is what we're going to do with it, I would say it goes according to your policy. If you don't have a policy, if you don't have a written policy, you may have an unwritten policy based on your tradition. And so if your tradition has been going to the family and saying, okay, we received $1,000 in memory of your beloved one. That $1,000, we're going to suggest that it go toward the general budget, the building fund. Your beloved was very active in children's ministry, so we want to use it on children's ministry, something kind of like that. But until you have a written policy, you're going to be relying on your tradition and what you've done in the past. Because that's sort of the expectation, right? But you did it for them. You gave them a choice. So now I want a choice for how my beloved one's memorial gifts will be spent. Make sense? You know, I'm thinking that if, I mean, who is the authority over the memorial fund? Who gets to decide how it's spent? Well, you know, and that's, I'm one of those people that's just kind of afraid of being blamed for something, and that's why I like to have a policy of some sort, that at least I know who, and so if the memorial fund, so maybe your memorial fund is kind of owned by the trustees. They have the authority over the memorial fund. They decide how it's being spent. And if that's what your tradition has been, if the trustees own it, that's fine, you know. But you don't have anything in paper that says it is our policy that any gifts given to the memorial fund fall under the authority of the trustees, and they will decide how it will be spent. Mm-hmm. I would put it in your financial policy. I think, because I think the people who, like your treasurer, needs to know, yeah, well, if you have turnover in your treasurer, lose some of that history. So having a policy, you know, having a written financial policy that says, here are our various funds and here is the authority. So here is who can decide or approve payments for that. It's not unusual. I'll get calls from people who want me to pay some bill. I'm like, I can't pay that bill. It's not out of my budget. The person who's responsible for that budget has to approve the payment. Then I can pay it. How else can I help you? Well, I appreciate the time that you've put forth coming here and spending some time with me. You have great questions. If you think of others, you know how to get in touch with me. And I think you can have as many as you like. How many? Because I brought. They told me to prepare for 20, so I have probably 15 left. So if y'all want some extras.